Why does this spinoff make sense right now? Tell us kind of the fundamental reason for doing this and why you want to be with that part of the business.
Yeah, first, Tim and Carol, thanks for having me. And maybe the best way to tell this story is to tell a little bit about Flex. Flex is one of the world's largest contract manufacturing company. We're the name behind the brand. So we make everything for folks who are in the automotive industry, in the healthcare industry, in industrial companies, consumer brands. Think of something, we probably make that. Through the years, when I joined Flex in 2019, I don't have a contract manufacturing background. I came from industrial companies. I ran Eaton's electrical business, worked in Honeywell, so didn't know much about contract manufacturing when I joined. But I knew one thing is that the world in contract manufacturing was changing. Contract manufacturing is built on the logic of labor arbitrage, scale, lowest cost. And with geopolitics and how the world was changing, it felt like a new model needed to emerge. So what we started doing at Flex was really, other than kind of fixing the fundamentals of the business, exiting some kind of non-core parts of the portfolio, we spun off an asset called Nextracker in the solar space. That's a $17 billion market cap company today. But then we focused on kind of a few end markets that we felt had potential. One of them, this was much before the ChatGPT moment, was power in the data center space. And now me coming from electrical and running Eaton's electrical business, noticed that Flex made the power that powered the chip. And I thought, well, compute's going to get power hungry someday. Let's figure out how to invest in power end to end. And we started putting a whole bunch of acquisitions together to really put together compute, cooling, because there was a lot of heat getting generated, and the power of the chip itself and all the power up to kind of utilities. So over the last 7 years, we have created this business that is focused on data centers and utilities that has been scaling up really, really fast. And so it felt like the perfect time to take that part of the company, which is more like a products business, and then spin it off into a standalone business that is catering to data center space and utilities, and then keep the contract manufacturing portion of the company focused on investing in kind of new growth markets that we see happening.
If for investors watching and understanding how you report right now, does it mean that the Flex Agility Solutions part of the business is the part that's being spun off? Or are there parts from both of these reportable segments that are being spun into the SpinCo?
Yeah, so Tim, till our fiscal year just ended, so we just started a new fiscal year, and we changed our reporting segments to help clarify this, because our data center portfolio was split between parts of agility and parts of reliability. So compute was in agility, power was in reliability, and so it wasn't all together in terms of external reporting segment. So we've just changed that in our new fiscal year. It's called Cloud and Power Infrastructure, CPI. And that is the segment that will be getting spun off into a new entity.
So what's the growth in that segment versus the growth in the traditional manufacturing segment?
Yeah, so the growth in the CPI business last year was around 38%, which was our last fiscal year. We have guided to this year being 65 to 75%, and then next year being 80+%. So obviously heavy growth.
Yeah.
In all the rest of the business, right now we have guided to kind of low to mid-single digit growth. In that also, in this parts of energy infrastructure that's growing fast, consumer is growing slowly. So net, we're more comfortable about the low to mid-single digit growth for what will remain in Flex.
So kind of almost, I hate to say old versus new economy, but it is very much a play on the AI build out, correct? It's fair to say that that's what this represents?
It is a little bit of the AI build out, but really it is what is changing from a technology perspective. So I talked about, if you think about the electrical infrastructure, what is going to change, I would say, in that infrastructure is pretty significant. It's driven by data centers in the sense that data centers are power hungry and power density has become a huge thing. But that is going to change how electrical infrastructure gets delivered within kind of the context of data center to grid. So a big reason is, yes, the growth of data center, but electrical infrastructure is going to change. So it means that distributed power is going to change. It's going to look different. So there's a technology revolution also happening. The growth is driving it, but the technology change is also driving why this makes sense at this point in time.
You know, Revathi, I want to ask you, though, that's interesting because I do think some of the conversations we're having, starting slowly while everybody says we're early innings in this build out for AI, that this idea of an exit plan at some point, whether data centers are up in up in space, like at some point that growth slows down. So is it the data center really fueling the growth now along with utilities? But longer term, do you feel like it will be utilities that are really the engine of growth longer term?
I believe so, Carol. So I believe that today data centers are fueling the growth, but data centers are also fueling the issue that the technology needs to change. Power density is so significant that we can't deliver power the same way that we were dealing with it before. So this idea of solid state transformers and how power is going to get delivered is becoming a very important way, which means that the grid needs to change, which means that utilities need to change. So the growth is driven by data centers, the technology revolution is driven by them, but that has to make its way to the utility sector. So my belief is that now what you're seeing is with data centers, but that's going to translate into how power is getting distributed, how it's getting transmitted. All of that is going to change with time, which is going to drive a different kind of growth.
Yeah, the big question that we've been asking, and we've been reporting on this a lot, is the effect that it has on consumers, and in a world where we don't necessarily have all of that power right now. So where do you think that power ends up coming from, and what happens if we don't have the grids resilient enough to handle that power, and we don't have a way to produce it in a way that doesn't cause all of these prices to go up for all of us?
Yeah, unfortunately, in the short term, prices have been going up because there is so much power getting consumed. And right now, it's somewhat of a zero-sum game in the sense that new power generation methodologies are not coming up fast enough. So a lot of people are making do by putting cogeneration systems, solar and alternate energy systems to get things up and running in the interim. But in the longer time frame, things like what is happening with nuclear and small medium reactors, those kinds of alternate forms of power generation have to come into play. I have been in the energy space, Tim and Carol, for a long period of time. I remember going to so many utilities companies talking about we needed to change our distribution system, our substations, our transmission systems. Money wasn't there to be invested. So we are going through a generational change right now. And the idea that we're going to have new forms of power generation, like SMR, nuclear reactors, I think is an important way to think about this. I would say that we're making do in the medium term with other forms of power generation, but we will have to have new forms of this moving forward.
Yeah, I feel like everybody we talk to about data centers, and we say, what kind of power? Solar, renewables, carbon, and nuclear. They're like, check. We need it all. Hey,
Right.
We only have about 50 seconds left here. You guys have a network of more than 100 facilities in approximately 30 countries across 4 continents. How resilient are your supply chains with what you guys have to do?
Carol, we're built for this purpose. I mean, I wouldn't take any credit for this, but we have managed through tariff issues, geopolitical issues, through trade wars, through supply chain crisis, through a pandemic. We have such complex systems built, both from a software perspective, a very complex set of supply chain metrics that we track and manage on behalf of our customers and ourselves, that Flex is very competent to manage through any supply chain crisis that's thrown in front of us. And I would say this is our core competency. We do it amazingly well.
Well, when does the spinoff? When is it completed? Just real quickly.
We have said early next year, calendar year.